So wow, we had a we had a heck of a webinar yesterday. We had, gosh, I think it was about 850 folks watching live. I think the view count's been up to, I don't know, 3,500, 4,000 people by now. I think my guest, Lyle, Radke, and Hamp Thomas are probably recovering. I know I sure am. We had a big audience. We had a lot of appraisers, and appraisers are angry. They're frustrated. You know, I bet if this Fannie Mae announcement came out 2 years ago when we were all so busy we couldn't see straight, it wouldn't have been a blip on the radar. Probably wouldn't have even noticed it. And I think one of the reasons why we're all riled up is because we're not busy now. You know, the rates have doubled. We're all kind of scrambling for crumbs. We don't have much work. And then, boom, we get this announcement saying they're not going to use appraisals in certain instances, which they've been saying for a long, long time. And I'm not trying to defend the position. I wish there were appraisals on everything. But as a consumer, like I said during the broadcast, I bought a house and really didn't care as the consumer. Now, as an appraiser, that pains me. But we're going to carry on the conversation a little bit. I got a special guest with me that is very smart on this topic, and we're going to bring him in when we come back. So stick around. Hi, this is Brian Reynolds. You're listening to the Appraisal Update Podcast, brought to you as always by the great folks over at Appraiser eLearning. You need some education? Check us out at appraisereLearning.com. And without further ado, I want to bring in my buddy Jim Baumberger. Jim has been a working appraiser. He ran an AMC, owned an AMC for a while. He was a chair of his state regulatory board for a bit. And Jim, you've ran several appraisal divisions in banks and other financial institutions. Welcome to the program, Jim. Glad you're here.
Hey, thank you, Brian. It's always a pleasure to be here with the folks from Appraiser eLearning. And
yes.
I do have a few things to share about this topic.
Yeah, and I'm excited that you're willing to spend some time with me today and talk about this because you are a very knowledgeable person. Before we get into the weeds in depth, and I know you didn't get a chance to see the webinar yesterday, and I'm actually kind of glad because you could speak without knowing, but I want to bring Benjamin in just for a second. And he can kind of give you the 100-foot overview, right? Ben, just without going into a lot of detail, let my listeners and maybe viewers know, in case they missed it, what it was, what kind of audience we had, hostile, what kind of audience we had, and if somebody does want to go back and watch it, where can they do that? Benjamin?
Well, hi, Brian. Hi, Jim Baumberger. Thanks for having me on. I'm Ben Maxwell. I'm the Education Director for Appraiser eLearning. We had a big webinar yesterday. We had Lyle Radke with Fannie Mae, who joined Brian and Hamp Thomas to talk about the Fannie Mae Selling Guide announcement. We had a little over 1,000 people tune in for the live webinar, and it's since had over 3,500 views. We had over 1,500 or 1,600 comments in the chat. Comments and questions come in from the audience. So as you can tell, it's a very heated discussion. There's a lot of unknowns about what this really means and how things are going to shake out. And so we feel like it's important to continue to talk about this and to understand where we came from and how we got here, and just keep it at the forefront of our conversations.
Yeah. And so, Jim, tell us what you know. Tell us a little bit of your perspective on this announcement, and what does it mean for working appraisers? Because appraisers are scared right now, and now they're just mad. They're getting really mad and frustrated. I'm scared too. I've been I've had a working appraisal firm for 30 years, and I don't want to close down my division. So talk to us a little bit. I know you've used the term in lectures and some of your educational offerings, post-FIRREA world, right? We're living in a post-FIRREA world. And so what does that mean? Give us a little insight.
Yeah, I'd be happy to, Brian. So, most of us either were around at the time, or if you're younger, you've heard about FIRREA, the Financial Institutions Reform, Recovery, and Enforcement Act, FIRREA. That was in 1989. And that legally guaranteed that state credentialed appraisers would have lots and lots of work until it didn't. So some joked about FIRREA. They said it stood for finally, I'm a rich real estate appraiser. Little did we know that the joke was on we appraisers, but the punchline wouldn't drop for 15 or 20 years, which we'll discuss. So just to refresh your memory, we know about FIRREA, right? It required an appraisal by a state credentialed appraiser for all federally related transactions, known as FRTs. Now, at the time, it was almost universally believed that federally related transactions included all loans sold on the secondary market to Fannie Mae and Freddie Mac, as well as loans that were insured or guaranteed by the government, such as FHA, rural development, and VA. The devil's always in the details, though, and FIRREA within the statute did not define what constitutes a federally related transaction, or FRT. So fast forward, 2016, 2017, we had what I call the appraisal wars, especially in the cow states, Colorado, Oregon, Washington. If you were around in 2016, 2017, that was the previous boom and record volume for appraisal demand until the 2020 and 2021. And so there was rulemaking by the agencies. And when I say the agencies, Brian, I'm talking about the Federal Financial Institutions Examination Council, FFIEC. And I apologize, lots of acronyms, but again, you can think of the agencies as pretty much all the top line regulators you're familiar with. Within the agencies are the Consumer Finance Protection Bureau, the Federal Deposit Insurance Corporation, Federal Housing Finance Agency, the Federal Reserve Board, National Credit Union Administration, and the Office of the Comptroller of the Currency. So basically, in this rulemaking from 2018 to 2020, their final conclusion on FRTs was either brilliant or devious in the extreme, depending on your perspective. So what they did is, instead of defining what was an FRT, they created 4 exemptions to FIRREA's appraisal requirements. And they said that loans sold to the government-sponsored enterprises, Fannie and Freddie, are not subject to FIRREA's appraisal requirements. Loans insured or guaranteed by a U.S. government agency, FHA, USDA, VA, were exempt from the appraisal requirements. Loans with transaction amounts, the de minimis change, but now it's less than or equal to $400,000. And loans not originated by a regulated institution. Then, in almost a sort of a circular logic, they said any loan that is not subject to the appraisal requirements of FIRREA is not a federally related transaction. So virtually everything was off the table.
That's crazy. That's crazy. So we all have heard of evaluations, and that's a rub I have, because I think appraisers should be utilized for all valuations, right? So,
Agreed.
I bought a house, and the banker sent, I assume a real estate agent, I haven't seen it, to do an evaluation. And I'm okay with an evaluation, but I would prefer an appraiser do the evaluation, not a non-appraiser, right?
Right.
The other house I bought, I put a lot of money in that thing, and they were going to do an evaluation. I said, no. I want an appraisal, because, somebody's going to look at what I paid for it. Are they really going to know everything I put into it? You're going to send somebody to do a drive-by. No, it's important for me. He's like, well, it's going to cost you more money and take longer. I don't care. I will pay whatever the appraisal costs, because I want a qualified individual coming in this house and looking at everything we've done. That was important to me as a consumer. So The classification that you're talking about, right? What I'm understanding is they still didn't define what a federally related transaction is. They just explained what isn't a federally related transaction. And so you're talking about the de minimis. It used to be 250,000. It was that for a long time. And then it got bumped up to 400,000, which covers a lot of property across the country. So you can have a non-appraiser do an eval, which is so frustrating. That's something we ought to try and get changed. But you're saying it excluded Fannie Mae, Freddie Mac, FHA, and VA from that category, meaning the whole intent of FIRREA of 1989, where you've got to use an appraiser, is really kind of out the window.
They gutted the whole thing, Brian. So again, that's why I say it's either brilliant or devious. I tend to think it's devious. And, when you say you wanted an appraisal, why did you want an appraisal? You wanted an appraisal because there is no other group of professionals as prepared by education, by experience, by ethical standards of practice to protect the public trust, serve the credit financial system of America, and safeguard the real estate wealth of Americans as today's highly competent, highly trained professional appraisers. So I agree with you. Appraisal is the gold standard in collateral risk mitigation. But after this rulemaking, the FFIEC estimated that 90 to 91% of all residential mortgage transactions do not require an appraisal based on FIRREA. That's why I said, unfortunately, the joke was on us. It just took about 20 years for the punchline to drop. Now, so that's why I say we're in a post-FIRREA world. We are no longer in a world where clients are ordered by regulation to use our services. So we're entering what I consider a new phase for the profession. And that's where we're at today, Brian.
Yeah, so, one of the things Hamp, and Hamp's a great guy, and he's a practicing appraiser. He's predicting that the appraisals are going to go away for Fannie and Freddie. And with what you're saying, if the appraisal is the gold standard, we really don't want them to go away. And I made something perfectly clear, and people hate me and get mad at me, but if you have a lot of money, Jim, and you want to be a private lender and you lend it, you can make your own rules. I mean, it's your money. So I think that we as appraisers need to understand we don't have a constitutional right to get orders from Fannie Mae and Freddie Mac. We don't have a God-given right for that. But that's
correct, Brian.
I mean, we don't.
No, we don't. But there's some good news. You're not unique. Well, you are unique, Brian, but stepping aside from your uniqueness, there's a lot of borrowers, lenders, and real estate brokers and agents that they still recognize the value of appraisals.
Sure.
For example, when appraisal waivers first started ramping up a few years back, the National Association of Realtors, they advised their brokers, don't necessarily jump on an appraisal waiver because that appraisal does a lot of good for your buyer. And so, Fannie and Freddie. So first of all, the announcement. Let's talk about the announcement.
Yeah.
So you're right. It's the timing. Had that dropped when appraisers were too busy, they were like on a point of exhaustion. They hadn't seen their families in months. It probably would have gone below the radar. But it hit when this is as big a slowdown as I've ever seen in my career. And I've been doing this for about 130 years. So the timing, couldn't have been worse because you think back to the basic tenets for appraisal modernization. One of the big ones was to reduce this limitation of capacity among the appraiser population, which we talked about a graying appraiser population, shrinking numbers. And so one of the big rationales was this is going to take care of that limit in capacity. And yet they're dropping this at a time when, appraisers have a lot of excess capacity right now.
Yeah.
So the timing was suspect. And then like yourself, I'm not an apologist for Fannie or Freddie. I don't have any interest in them. I am a fan of technology. And so some of the tools around this, I think, this advanced technology, it's really a positive, but I think those tools should be in the hands of the appraisers. And I don't think it should all be all computerized. I mean, let's look at what happened to Zillow. I could be wrong in the numbers, but they lost like over $800 million because they had a very snicky computer algorithm like the GSEs, and they went on a buying rampage. And, I mean, it was disastrous, right? So I think that the best of both worlds is to put the advanced technology in the hands of a professional appraiser, and now you've got the optimal result. So, but back to, there are a lot of people that see the value in the appraisal. And I'll tell a short story about my dad. My dad was an appraiser. Back in the day when appraisers were not really specialists. So, this is before licensing. Mm-hmm. Now, he was an SRA, right? In today's world, you can get an MNAA designation from the National Association of Appraisers. In my dad's day, you didn't have a license, so you weren't a commodity, right? It wasn't an appraiser's an appraiser's an appraiser. Anybody can fog a mirror, has a license, you can fund a loan. In his day, he had to make a case for himself. Clients hired him because of his education, his experience, his ethics, and the quality of his appraisal reporting and analysis. So what I would suggest is we've gone from a world in which, as you said, Brian, we had a constitutional right to get work to, like other professions, we have to make a case for ourselves. We have to make consumers and regulators understand why an appraiser and an appraisal report is the gold standard in mitigating collateral risk. So we've got to go from a commodity mindset back to the relationship mindset. Brian, I'll bet even when you're a young guy, but when you got into business, I mean, it was all about relationships. Do you recall that? Everything was about relationships.
Yeah, it really was. It's I started right before licensing. So and the thing back then, the banks really wanted to make sure you were qualified and competent.
Yes, they did.
It wasn't, I've told the story for years. People can get, not everyone, but most people can get a driver's license. It doesn't automatically make you a good driver, right? Right. So a lot of people can study and pass a test and get an appraiser license. That in and of itself doesn't make you a good appraiser. But it seems like that's the litmus test now, that a lot of the clients just say, show me your license and you're good to go, And back in the day, you had to have experience. You had to show your education. You had to send sample work in and be qualified. I know becoming an FHA fee panel appraiser was a lot of hoops to jump. I mean, they came to the 3 samples I sent, they came to the houses. Tom Hall from FHA came to the house and went around and see if he got what I got. I mean, it was a very thorough. And then a few years later, they're like, we'll open it up to anybody that's got a license. So it was very frustrating. But yes, building those relationships and having people that would trust you and value your service was incredible. And that kind of went out the window, at least to some degree. But
it did.
But yeah. I'm finding,
also the customer service part of the appraisal practice, right? I mean, sometimes when I would teach a course, I'd ask a group of appraisers, what business are you in? I'd get all manner of answers. Never once did anybody say I'm in a customer service business, right, and my service is our valuations, right? And so, like in my dad's day, you couldn't not return phone calls or not answer emails. You couldn't be 4 days late with a report and not let somebody know why you were late. A lot of things that became kind of routine for some appraisers. Now, I want to be careful. I don't want to start Firestorm 2.
Right.
I'd say probably 90% of appraisers are consummate professionals, but there's at least 10% that, they go dark, they inspect the house, they never write the report. They send a report to a lender that is so garbled and garbage that it can't be used to underwrite. So it's a small thing, but I would say if I had advice for appraisers, and I don't mean to be presumptuous, but my advice would be let's go back to the relationships. Now, you may think that the people at the AMC are evil rat. I was going to use a profane word. I won't do that.
We're a clean show here. We're a clean show, Jim.
Yeah. You may think you hate AMCs, but I will tell you that within an AMC, there's a lot of people like myself. I am an appraiser. I respect appraisers. I love appraisal. My dad was an appraiser. And so, our hallmark was treating appraisers with a lot of concern and respect, trying to create like a partnership. And, we had some appraisers that had some relationship with us and others not. So, we're in a world, Brian, where I think if you're an appraiser and you work through AMCs, and the reality is they're controlling most of the volume now, I mean, you can create a relationship with someone at the AMC, whether it's someone in their review team, someone in their orders team, somebody in quality control. So I would tell appraisers, it's time to sort of like come out of the ground and let people see your face, meet people, give them a reason to trust you, to have some faith in you. And we're in a world where you have to make a case for yourself. You got to convince clients why they want to hire a professional appraiser.
Yeah. That's excellent. A good friend of mine, Jason Covington, has said, he's really not that slow. He's maybe not as busy as he was, but he's fairly busy, pretty busy. And he said, Brian, I really think that it's attributed to how I've acted over the last several years. He said, when my phone rings, I answer it. So if a client's trying to get a hold of me, they know if they call my phone, I'm going to answer it. Mm-hmm. They get me. And he said, I don't turn appraisals in late. I mean, there's always an exception. He said, I communicate to them. Now Jason works night and day, and it's just him, but he thinks that he's reaping the benefits now for the excellent customer service he's provided over the last many years. And we've dropped the ball. I mean, I'm not perfect. My office has dropped the ball, and we're probably reaping those benefits now that, if a client has a choice, hey, I can order it to Jason, he answers his phone and he's going to get it back to me, or I can send it to Brian. He never answers his phone and he's late the last 3 orders. Who are you going to pay? I get it. I totally get that. But, we are finding that we're doing some, we've got a transaction right now that's a cash transaction. Right. They want to know what the property's worth. We've got an order we're working on right now on a small commercial that the husband died and the wife's going to list the property. They have a real estate professional, but they want an appraisal so that they know what to list this property for. So there are a lot of folks out there that still value our opinion. I wanted an appraisal on the house that we spent a bunch of money on. It was important to me. I don't care what it costs. I'm going to pay the appraisal fee. I want a professional coming in and looking at this property. Let's talk about the announcement just a little bit more. I know your time is precious, but I know a couple of the things on this March 1st announcement. Is the big thing is, the property data collectors. And, I know Fannie and Freddie, everyone has said that an appraiser can do that job. It's not excluding appraisers, so appraisers and trainees can do that. I think there's some misconceptions on that because I think we had some comments on the webinar. Now, let me just apologize to some of the viewers. Ben, how many questions did we end up having during that thing? Do you know?
Well, we had over, about 1,600 people enter, a message, whether it was a question, a comment, a rant, or a rave. There were 1,600 people or 1,600 messages that were received on our webinar chat thread.
So, ladies and gentlemen, there is no way. Let's just say it was 1,000. Let's say 600 of it was just comments. 1,000 questions. How am I going to get to 1,000 questions in what was supposed to be 1 hour that we had it go an hour and a half, by the way? How am I going to get to 1,000 questions? Because I've been accused of cherry picking. No, here's what I did. I went back to the very first question and started going down the list. And ones that I thought were redundant, I did skip over those in an effort to get through as many as we possibly could. So we didn't cherry pick anything. We just had 1,000 or more questions in an hour time frame. There's no possible way. So I'm going to invite Lyle back for another, let's call it round two. And maybe, Ben, we need to do, send your questions in advance, right? So that we can.
Yeah, I think one thing, Brian, is I wouldn't take too much offense to it. Obviously, this is a very uncertain time, and it's a heated discussion, and
It's a hot topic.
people are unsure. And because there's so much to talk about, yes, there's no way we can get to all these questions. But what we did do is we took all of the questions from the first webinar, and we compiled them into a document. We sent those to Lyle and to you and to Hamp. So we can review the questions that we did cover. We can make a new bank for the questions that we didn't get to for round two. And I do agree with you. Maybe we could send out some marketing in advance where we can have folks submit their questions prior to the webinar. That might help us as well.
Yeah, because just and we love doing these live streams, and we love doing it unrehearsed and not in advance. But when you've got that many people firing at you left and right, it's impossible to try. I mean, I'm trying to concentrate on my guest and questions, and it's just impossible to get through those. But some of the questions I know and some of the concerns, Jim, is these PDCs, property data collectors, right?
Right.
And one of the things the announcement said is they have to be, they have to pass a background check. They have to be professionally trained. They possess the essential knowledge to competently perform the property data collection. So what's your interpretation of that? And how do you feel about that? Because I know a lot of the appraisers are out there are super concerned about, well, how are they being professionally trained? Who's training them? Is it a 30-minute training session, a one-day training session? Is it a one-week training session? We've got trainees, the policy used to be that I had to go out with them on the first 50 inspections. Does anybody have to go out with these people, right? Or are they just turned loose? So I think that's a valid concern appraisers have. What are your thoughts on that?
Yeah. So, Brian, I would say the absence of any kind of education or experience requirements for the property data collectors was probably the biggest glaring weakness in this entire appraisal modernization platform they've rolled out. And so when Freddie Mac introduced the ACE plus PDR, which essentially is an AVM plus a property data report, or as you might call it, an evaluation, right? It's the ACE plus PDR is an evaluation. When they announced that, it was the first time, to my knowledge, that either GSE tried to define some training and standards. So it's not tightly defined or structured. It's nothing like your trainee, Brian, or an appraiser. But the Freddie Mac document, and Fannie alludes to it, they have to be trained. The training either has to be instructor-led or online. There must be an exam at the end of the training, and they have to pass the exam. And then whether it's a direct engagement lender or it's an AMC as agent for another lender, all of the work of the property data collectors has to be monitored. If it's an AMC, they're required to do quality control on the property data report before they provide it to the appraiser. And they say that if a property data collector makes too many errors, they will be removed. And then it's a little squishy, but they also say that if the requirements for a property data report or the supporting exhibits like the photos change, then the AMC or the direct engagement lender is required to provide continuing education for the property data collector. So this is in its infancy, and I think it remains to be seen, Brian. We may see a world where they begin to put some hourly minimums on this or some experience requirements. We may see this fleshed out. Who knows? A couple of years from now, maybe a property data collector will be licensed. But right now we're in the infancy. There's some sort of broad outlines of what Fannie and Freddie expect for these folks. But to your point, it's so kind of vague that it is literally going to be up to a direct engagement lender or an AMC to decide what training.
Yeah, and I think that's scary. Scary for the appraisal population. And so maybe that's something that we need to address really, really soon. Jim, thank you so much for being here. Time flies when I have you on. I need to have you back in this seat very, very soon, my friend. You're a wealth of knowledge. You're passionate about the appraisal profession, and that's what I love about you. If somebody wants to reach out to you and have a conversation with you, how can they get in touch with Jim?
Yeah, it's pretty simple. My email is jim111b like in Baumberger at yahoo.com. So it's jim111b@yahoo.com. 111 is a secret code for my birthday, January 11th.
Hey, very cool. I like that. Ben Maxwell, if someone wants to reach out to you, how do they get in touch with Ben?
Sure. They can reach me at Appraiser eLearning support inbox, which is support@appraisereLearning.com. And they can also come to the 2023 ACTS conference in Sacramento and hang out with Jim Baumberger, myself, or with Brian Reynolds, which will be coming up next week. I think
real soon. Yeah.
April 3rd and 4th.
Real soon. And you stole my thunder, Ben. That's why I don't let you on these things, right? He's prettier than I am, Jim, and now he's stealing the show, right? He's taking words out of my mouth. Yeah, so Jim, Ben, and I all will be at the ACTS conference in Sacramento. Some preliminary stuff starts April 1st, so we would love to see you guys out there. Jim, when do you get out? When will you be there?
Oh, I'll be there on the 1st. I think Ben's got me teaching a new class right before the conference. So I'm really excited.
And we didn't want to use this avenue to really plug his class too deeply, but Jim does have a desktop appraisals course, kind of helping us understand this GSE appraisal modernization. And he's teaching it for the first time in person at the ACTS conference as a pre-conference class. And we also have it being available as a self-paced class at Appraiser eLearning.
Well, since you brought that up, if somebody were wanting to register for that course, how do they do that, Ben?
It'll be released later this week. The course is called Desktops 101, Navigating GSE Appraisal Modernization. And if they want to sign up, they can just subscribe to our newsletter from our website if they're not already, because we'll be sending out an announcement next week about it.
Very good. Very good. Well, thank you both for being here today. I know you're both busy guys, and I look forward to seeing you very soon in Sacramento. It's going to be a great time out there.
Thank you, Brian. Thank you, Ben.
Thank you both. Appreciate it.
Ladies and gentlemen, you've been listening to the Appraisal Update Podcast, brought to you by the great folks over at Appraiser eLearning. You need some education? Check us out at appraisereLearning.com. Thank you very much for your hard work. Wait, I'm going back to Jim. One quick second. Jim, I forgot to ask you a very important question.
Sure.
Do you think the residential appraisal profession is in a state of demise? It's going to be over? Because somebody said that recently.
I don't, Brian. I'm not a shill for Fannie or Freddie, but usually they're a little bit more thoughtful. Fannie's announcement, it was
bad timing,
almost reckless in causing all this alarm, and I don't think it had to. They could have simply added another paragraph. The last sentence of the second paragraph basically said, so we're going to add these snicky new tools to the spectrum along with traditional appraisals. They could have added a short paragraph and sort of explained that, they're still going to use appraisals. I do think the hybrid appraisal is going to surpass the 1004 URAR as the mainstream mortgage lending appraisal. So you'll have waivers, you'll have evaluations, you'll have desktops, you'll have hybrid appraisals. And, I do think that traditional, 1004 URAR, it's not going to be widely used within another year or two.
Yeah. Wow.
So the hybrid is the workhorse.
But they will be using appraisers to be doing the desktop portion of the hybrid. Yeah. Okay, great.
They will be using appraisers. Definitely.
Thanks, Jim. Well, you heard it from Mr. Jim. Ladies and gentlemen, until next time, be safe. Take a little vacation. Try to release some stress. Get you a punching bag. I got one. Until next time, I'm Brian Riddles, your host. Happy appraising.
The Appraisal Update Podcast is brought to you by Appraiser eLearning.